Good afternoon. It's the Mike and Mario show here again. It's Friday, June 18th. How are you doing, Mike?
Mario, I am doing great despite the weather. It's raining outside, but yet I'm gonna make the best of this weekend. Looking forward to connecting and going over this past week's, little fiasco we experienced, man. So definitely good to be back. How you doing?
Yeah, I'm fine as well. We've got rain here in London too, but the silver lining is that it's cooled down a bit.
Yeah.
So interesting week this week, and it has been. Do you want to kick off with the Perth Mint and what we've heard from? I think it was Robert Keynes and Daniel Vigario. He's an accountant. They've gone through the Perth Mint's financial statements with a tooth comb. And maybe you can show us what they found out about the Perth Mint.
Yes, I can. So let me actually put this on the screen here, and then I'll switch it over, and we will dive right into it. And I got a couple clips that I want to play. And so let me actually, got to get myself together. Okay, here we go. Nope, wrong one. Here we go. Fractional lending. So this was a great, didn't get a chance to listen to that whole thing there, because once I listened to the follow-up from Gold Silver Pros, I realized what was going on with this one. But I got a couple clips I want to play, if you don't mind. So we want to share your 2 cents on this, whole little conversation real quick as I pull up the other stuff, if you don't mind.
Yeah. So this guy here that David Lynn has interviewed, he started working for the Perth Mint back in 2019. He's an ex-Goldman Sachs banker, just to give you an idea. Yeah. He's worked for the World Gold Council. The World Gold Council might sound like a friendly institution towards gold, but they actually were the ones who sponsored the GLD ETF. Mm-hmm. They don't want the small investor to buy physical gold. They want people to stay in the paper game. And from what I heard from this guy, he said that they don't lend out any of their physical gold and silver. But if you listen to Gold Silver Pro's video, which they did, I think 3 days ago or 2 days ago.
Yeah.
I mean, that accountant, he's been an accountant for over 14 years, I think, a lot of experience. And he went through the financial statement, and it's the Perth Mint's financial statement. He didn't use information, third-party information.
Yeah. So what I'll do is I'll play this clip here. Just start off. Let me see here, because I've made a couple marks here. Let me get my stuff together. So I think it's just some of the things that stood out to me as I was listening that I think is worth mentioning or having repeated. So I'll play this, and then we will chime in on it a little bit.
The Perth Mint has sold precious metals. It's a sale to a counterparty. The counterparty, who we don't know who it is, we'll touch on this later, owes the Perth Mint for that sale. That's normal for selling, right? Normally you'd pay in 30 days. However, in this instance, the counterparty only pays the Perth Mint at some undisclosed future date at the market price of the metal at that date. That is highly unusual. In fact, that is highly risky. And because it's so risky, the Perth Mint has had to take out a derivative contract to protect themselves against that. And we're going to find out why that's important later on. And finally, on top of that, because the Perth Mint allows such long extended settlement terms, well, they've decided to take some finance income on that. Again, really unusual. Okay, and again, we'll touch on that later. So please just, if I want to make one point today, this is the most important thing that we need to pay attention to. Okay.
All right, so I'll stop it right there. And so what stood out to me is the fact that they are profiting off of some of the products that they've set aside and created, and by leasing and all the unknowns of what's going on behind the depositors' backs, they are profiting. I think it's some numbers he threw out there that we can touch on in a minute, but the biggest concern, the biggest takeaway I got from this was that literally because of the inclusion of this new gentleman here, we talked about, who's a former, I'm going to say deep state, but a former big bank operative. He was literally brought in to pull off a heist in this magnitude here that majority of the people who actually have their metals there have no clue that their metals are being used to profit the Perth Mint while putting it at risk. Because if the market continues to have these issues of being able to actually get supply, they won't be able to get that metal back, possibly. What you think?
Yeah, I mean, a lot of the people they talk about that have a risk are people who have unallocated positions, which means that they would have to convert to allocated. Unallocated means that, you have a claim, you don't really own any silver. And yeah, they went through all the numbers and they showed that they're net short. And there's another interview by the Perth Mint CEO, I think it was yesterday, with David Lynn from Kitco, and he categorically denied that they lend out any gold. Yeah. But Rob Keynes and Daniel Vigario, actually, it was Daniel Vigario, the accountant, he proves that the Perth Mint, the bulk of their income or their revenues is from basically lending money on the back of people who actually keep allocated physical gold with the Perth Mint, and also maybe on the back of those who have unallocated gold. And this gentleman, Richard Hayes, also categorically denies that they do any derivatives trades. But if you look at the analysis by Daniel Vigario, if they didn't trade, they wouldn't be able to hedge a lot of their positions that they have, which are not, they're like short. So they have to hedge because of market price fluctuation. So it's very interesting. I'd love to see Robert Keynes, Daniel Vigario, and the CEO of Perth Mint, all three being interviewed together with Kitco, but I don't think that would happen. I do think Kitco needs to bring in Robert Keynes and Daniel Vigario of the Gold Silver Pros. Yeah, I think that would be more than fair, because they're basically saying, oh, these people are not really coming to us. I think the ex-Deutsche Bank guy said, well, they haven't contacted us. How can they know anything we do? Well, because you have public financial statements, and they use that. Yeah. They use your public financial statements to comb through, all the data. Right. But I like to emphasize, though, that, like the guys at Gold Silver Pro said, there's nothing wrong with the Perth Mint products. You can still buy gold and silver coins and bars from them. Yeah. What the problem is that you need to be concerned with unallocated positions. And why do people have unallocated positions? Well, because there's no storage fees, because basically there's nothing behind it. Yeah. It's cheaper. But what could happen is there's a big crisis, and you go to the Perth Mint and you say, I want to convert it to allocated and then take the metal. It could take weeks or months, and then it could be too late.
Right. Especially, it could be too late, definitely, if this shortage, this well-known shortage, U.S. Mint confirmed silver shortage in particular, continues to increase, which it definitely will head into summer, because we know that, I think there's a lot of pressure on gold, of course, due to this Basel III and all the banks deciding to try to really, put their hands into the pot of available and above ground gold. But it's definitely going to create a pinch. And so I think what they're trying to do is educate as many people as possible to say, if you are a part of this program here, be cautious, and probably want to check in, because if you think you have something there that's yours, you might want to think again, because if there's a bullion bank run, you might be left out. So get in while you can.
Daniel Vigario, he's based out of London, actually. He's originally South African, and he says, though, this is more than just the Perth Mint. This is just shows how this whole bullion market and all the markets are so manipulated, the fiat currency market, how there's so much smoke and mirrors, and everything, and that's why it's important to have physical gold and silver, sound money. Let's hope this, these shenanigans are brought to the open.
Yeah, let me play. I'm gonna play another clip in reference to how he's concerned that the Perth Mint can't meet their obligations. So I'm going to play this little short clip here, and we'll get ready to move on to another subject in a second. Let me click play here.
And further on, to answer this question number one, if they liquidate all of their current assets and current liabilities, which I've listed above, which Rob has gone through already. They can liquidate it to a value of 73 million, and the net of those two gives you 146 short. So you can see here, to answer question one, the Perth Mint categorically cannot meet all short-term obligations, right, without using the ETF. Now, if you look back in history, you'll see that has never happened before. They have always been positive. In other words, the Perth Mint has always been able to meet obligations, current obligations, okay, using
until
their current
what year, Daniel?
Until year 2019, when the ETF was formed.
And
now, really,
that's when, by the way,
that guy.
in the Kiko interview came to the Perth Mint as that exact year.
Correct. Okay, so this is significant. So we've now answered question one. The Perth Mint cannot meet its obligations, and the investors, if you're an investor, a client of the Perth Mint, excuse me, you're at risk because, well, they're short £1 billion, so you could be sitting as, for delivery, for physical, you want, conversion from unallocated to allocated, they're short $1 billion. So John Adams is completely right. The Perth Mint does have problems at 2020 to convert to allocated because they're short $1 billion. And if everything went wrong and the Perth Mint want to liquidate everything, they're still short. Okay, question one answered.
All right, they're still short. So
Yeah.
I think that does a good job right there of summarizing some issues that their calculations show the Perth Mint is definitely short.
Yeah, and the guy he referenced there that joined in 2019 is not the CEO, but the other guy. He's an American, who worked for Deutsche Bank, and I think he was involved in creating the GLD ETF as well. So
so here's that guy here for those that might just be tuning in. This guy here, he happened to come at the right time when Perth Mint got into the whole fractional lending, ETF creations, coming from Deutsche Bank, having experience in all that issues that Deutsche Bank had. And they, of course, paid large fines and all that stuff like that. So, what a coincidence, huh? I guess. That's just okay, let's keep it moving, man. So for those that are tuning in, hit the thumbs up button, share your support for the channel. Once again, just going over some of the really important information that people need to know in regards to the paper products, ETFs, all that unallocated stuff that's been created that has been very important in them being able to suppress the price and prolong this, the great heist that has taken place with people thinking they own things that may not necessarily be there. So just stuff to continuously pay attention to. So let's move on a little bit to, I guess, this week's Federal Reserve follow-up. We have Bullard says the Fed's hawkish shift, a natural response to a stronger inflation / growth. What are your thoughts on that, Mr. Mario?
Yeah, he came out today, I think, just before the markets open. So it had a big impact on the stock market. Let's have a look right now. The Dow is down 400 points. Gold and silver are still slightly up on the day, but they were a lot higher than where we're now. Bullard is usually in the last 6 or maybe even more years. Whenever the stock market has been in trouble, he's the one who's they wheel out to say something dovish. So it's interesting that he said that. I don't think it's anything really significantly different than what we heard from the FOMC statement. I saw someone, I think it was Rafi Faber or someone else, say that what the Fed did with his announcement last, was it Wednesday, I think, the 16th, was basically say that it's like two drug addicts who come out and say, we might quit in about 2 years, right? Or let's say there's an 18 drug addicts, which is how many people there are on the FOMC, and maybe 3 or 4 of them came out and said, we might want to decrease the amount of drugs we take in a couple of years. So that's basically what it is. Someone here mentioned, it says Mark Carl Arts, any word of metals contracts being sold this week driving down prices, or is this the dollar's last stand before it all crashes? This is what some people say. Well, how can the bankers be shorting even more paper gold if they want to cover their shorts by selling more? They're going to increase their shorts, but they're quite clever at this because they know the levels where the speculators, the smaller investors have their where they will get hurt and where they'll have to sell out. So what they will do, let's say they're net short 50,000 contracts, they'll come out and they'll sell when it's really illiquid, maybe 200 contracts. It drives the price lower, it triggers stops, and then you get all the specs, all the small people coming out and selling thousands of contracts. And then the banks just come back, buy back those 100 or a few hundred, and then they start it all over again. And so they've driven the price of gold from 1900 to around 1770 in a matter of days. And is it coincidence with the Basel III deadline for the European banks on the 20th of June? Maybe, but who knows? We'll find out soon. But yeah, I actually, as per the dollar, I think the dollar, this is like in the markets, we have the expression, it's called a dead cat bounce. The markets drop really sharply and then they bounce and you think, oh, everything's great. And then they just go down again. When the dollar will go back down, I don't know. But I have a feeling, looking at the British pound or sterling, if you go back to the 08 crisis, to the crisis last year, the pound always gets hit really hard in these crises. And I've noticed that the pound has come off quite a bit in the last few weeks. And it could be a precursor to a bigger, we could have a major crash in the markets. And yes, gold and silver and the miners might get hit, but I think it would be very short term. I think if we did have a crash, let's say now in June, it would be half the time that we had the crash back last year in March. And last year was the fastest crash in history and the biggest crash. So I think it could get even worse. We just have to wait and see.
Here's a comment here from Bernard. Says, hello, Mike and Mario. Thank you for both sharing your time. Everything you are referencing is on what they permit you to know. And that's very true. And they've given us more than enough to be able to analyze and assess the true nature of the system to where it has already spelled run for cover. Like, we all know that the system is literally rigged against us. The whole goal in these type of talks here is to hopefully reach some new people who may not be aware of this. And so we only talk about what we do know on the surface, but based upon the forensic accounting information that was just provided from the gentleman over Gold Silver Pros, we can see that things are starting to rear its head above surface. So that's more than enough information to tell people take cover. Because
and the point of the gold and silver manipulation that has been happening since the early mid-70s is basically to keep the dollar strong. And even though the price of gold has gone up a lot since then, this system where we have zero rates, endless money printing, huge credit, derivatives, Fed's balance sheet going to 8 trillion for the first time. This is only happening because they've been able to control, the precious metals, because gold and silver are money. So if they hadn't done that, maybe 15 years ago, the whole thing would have imploded and we would be in a much better place today, maybe with sound money. So some people say, oh, if they really manipulated the markets, how come the prices go up? Well, what I would say is that if they hadn't done it, we probably wouldn't even have the fiat currencies we have now. And there wouldn't be a price for gold in dollars or pounds, paper dollars or paper pounds. And I want to show this graph here of the last 7 days of the market. And once again, you mentioned the Basel situation earlier. To me, it's not by coincidence that over the last 7 days, this is a 7-day graph here, that everything's been, or gold and silver in particular, have been trending downwards,
given the fact that we are, what, 2 weeks away or a week away,
Yeah.
a week and a half away from the whole Basel III. So I would imagine that the goal will be, of course, to put as much pressure on the price as you can now for all the paper stuff that you're going to have to maneuver with,
They have to, so they can cover at a lower price.
Exactly.
So they don't lose as many billions. And then they can also buy the physical as well, because you can bet the bankers are going to buy physical gold as well.
Yep. So we got literally, let me see, we got 7, about 9 days, give or take. So I wouldn't be surprised if next week we also have some surprises or something like that tries to, get it down another $1 or $2 on silver would be a goal for them, I'm sure. And to get it down another 100 or so on gold would probably be a criminal banker's dream, so that they could try to cover some issues on their end. So it's strategically planned at the right time. And here's the biggest thing for everybody out in the community is that, the spot price might go lower, but the premiums will go up. So more than likely, whatever you try to do, if let's just like you got a buddy who's, good friends with you, he's going to not really increase it $1 or $2 or so. You're still going to end up paying more for your ounce of whatever it is you go to get, because, the coin shops and the dealers, they have to make sure that they keep their doors open too. And they're going to make up the difference of whatever the manipulation price end up going to. So I doubt they really care, man. But anyway, we'll keep it moving. So for those tuning in, feel free. Let's open up a little bit and get some thoughts or questions. So feel free to highlight anything in the chat, and we'll definitely try to touch on it, share our 2 cents on it. So feel free to chime in, and we'll keep it moving. And so I'm curious, Mario. So we are 2 weeks now, a week away from the whole El Salvador legal tender side of things, and I haven't seen any pushback from the U.S. It hasn't been mentioned, to Treasury or anything like that. Haven't mentioned the fact that they're concerned with, there being a little bit competition, as far as the legal tender status of the El Salvador situation there. IMF now is dialing back a little bit. So what are your thoughts on that? Like, was the whole idea of announcing this legal tender a part of the plan and right on time, you think? Because there hasn't been much, hoopla from the developed nations yet.
I don't know if it's got anything to do with the IMF, or I just think it was a move by the president of El Salvador. Yeah, I mean, he looks like a fairly young guy, so who knows? But what I said at the time when they came out with the announcement is that the best thing he could have done is just abolish all legal tender laws and let the people of El Salvador decide what they want to use for money. Yeah. But
so we'll see. So somebody said the World Bank is upset. And I remember seeing, let me see, an article yesterday that kind of hinted at that. I'll grab that. And then also, I forgot to mention one thing when we were talking about the projected 2 interest rate hikes between now and 2023, as if like they're going to actually be able to pull that off. And it's interesting how they use the narrative of increasing interest rates as like, was it the Fed forward speak or whatever they call it, to try to sell confidence into the markets type of thing. But yet I don't quite see this myself. What do you think they're going to actually be able to pull something off, or will they?
Yeah, I think they're in a tough situation right now because they're trying to rein in the commodities markets like lumber and copper. But they don't understand, or maybe they do, but they think most people don't understand that the reason why commodities are going up is not because there's inflation. It's not the commodities that cause the inflation. The people who have caused the inflation are at the Federal Reserve. It's Uncle Sam. By creating trillions, the Fed's balance sheet is more than doubled in the last 16 months. By more than 4 trillion, we are at 8 trillion. That's what causes the inflation. M1 and M2 going through the roof. That's what causes commodity prices to go up. So unless the Federal Reserve hikes rates, if they really want to be hawkish, they should have raised rates a few days after the CPI came out last week. They should have done an emergency meeting, because you can bet if it was the other way around, if CPI came out at -1% and the stock market was crashing, they would have come out before the meeting and said, we've decided to, in an emergency meeting, to cut the Fed funds rate by 1%. We decided to add 150 billion in QE a day or a month. And so, with CPI at 5%, if they were really hawkish, they would have come out and said, "Oh, we didn't expect this. We're going to raise rates now." Big shock. Then I would expect these big moves. But the thing is, the markets now are ruled by algorithms, and by the people who wrote the algorithms. They're all like mathematicians. They go to the Keynesian universities, and they don't think. In my opinion, they've been taught in a way to look at the dollar as something that's good. I saw yesterday a comment by economist from Johns Hopkins. You might have heard of him, Steve Hanke, or something. And he made a comment about Argentina. He said, Argentina, they need to forget the peso. They're borrowing too much money. The government, they've got too much inflation. And he said they need to dollarize.
Every nation to him needs to dollarize. And I'm thinking like, well, what's the long term?
And I replied to that tweet and said, why not go back to sound money? And I showed him that chart of the dollar that's been losing, 98% of its value since the Fed was created. I said to him, why dollarize? You could have replaced Fernandez and the peso and Argentina for, all the presidents since Nixon, the dollar, and so and that's why how the algorithms. My point was the algorithms that run the markets. They all think like this guy Hanke. I think his name is Hanke. I'm not sure, but
I'm trying to find his Twitter account. But so I follow his inflation charts, and he does great work. As he said, these are real, true inflation measurements. And of course, it's the nations that are really struggling that those numbers are extremely high. But his solution for everybody is to dollarize. You can afford all this if you give me your currency and just adopt the dollar. I'm thinking like, so is this guy, so he's a very smart guy. So clearly he has to know that the dollar is on its last leg in regards to the way the world sees it.
But it's just that these guys hate gold, don't they? They hate. They're Keynesians. That's what it is.
So he does a good job talking about the Iranian black market, and of course, inflation is through the roof everywhere. But
he's like gaslighting other people, so we don't look at the American problems. It seems. Iran, Argentina. What about the U.S.?
Now, here's a question. For his calculations that he put together for his, inflation metrics, are they the same metrics that he's using for the revelation of these other countries that are having extreme inflation? Is that the same measurement he would use if he cared about charting the U.S.? And then how far away from that is John Williams from Shadow Stacks? Original inflation measurements.
I think countries like Iran and Argentina, they haven't been as efficient as the Bureau of Labor Statistics and the U.S. government in streamlining these statistics, i.e., tamping down. They haven't learned about using hedonics and substitution in the CPI. So I would say Iran and Argentina probably still use the old shadow stats, the way they measure CPI like the US used to do maybe 30, 40 years ago.
But and I would find it hard to believe. I would assume that all the central banks have to be, working the same type of metrics, or perhaps not, because no one's really paying attention to it. And you'll never hear any of those countries that are experiencing high inflation being mentioned in mainstream news here. Like never once have they mentioned the issues in Lebanon, Nigeria, what I'm saying? So it's never talked here. Most people don't think beyond their own city for the most part. So you wouldn't go looking for information on how people are struggling.
The other problem with, just one more thing, the other problem with countries like Argentina and Iran is that they don't have the reserve currency. So they don't get the demand for their currencies. Correct. That keeps inflation down. The U.S. still has that.
Which is the main reason they're able to give it away with what they're doing. So here's a comment here from Robert. It says, gold may hit 1,500 before its permanent liftoff. And so I wouldn't be surprised. And that's the thing, when it comes to numbers, nothing would surprise me given the fact that I know the system's rigged and they have to come up with all types of creative ways to get the price down for their own benefit. So It would surprise me.
I still think you would have to pay like 1,800 for gold. You know, if you want to buy a real gold coin or bar, if it hit 1,500, you probably might not even find any gold if the spot price goes to 1,500, because it wouldn't mean anything. You know, I don't think there would be any gold. You know, if silver went back to 15, I mean, you'd have to probably pay 200% premium on it.
Right. And that's the thing, like the paper markets, paper spot price has already been disconnected. It first disconnected officially back when that whole Wall Street silver officially took off, and we started being exposed to the fact that there's not enough, you know, supply to meet demand. And so premiums definitely started jumping at that time.
Yeah. Last year as well, in March, when the lockdown started, there's a huge spread between the spot market and in London and the futures market on COMEX. It's like $80, $100. The market, the paper market, almost imploded back in March.
Yeah,
and I think someone had to step in and provide the physical gold.
Yeah.
I think what's his name? Andrew Maguire seems to think it was the BIS who helped out the bullion banks.
Yeah, I don't doubt it. Now let's turn a little bit towards, I guess, you know, the primary cover up for all this we're experiencing in the monetary and financial realm. It has to do with the, as I say, I'm gonna say Covertificate. And so they're trying to further the whole agenda of needing permission through a digital app to begin traveling. And so in the EU yesterday, they announced that starting, I guess, Monday or July 1st, that you'll be able to download your, you know, they try to say you'll be able to download your pass. And
certificate, they call it. Yeah.
And so, and then of course that's through the EU, but yet also I know in the UK, you guys are also experiencing a little bit of a extension on some things. Share with us what you're seeing on the ground as far as how, you know, Boris seems to be
it's almost like they're trying to push people to. He used the term double jabbed, which sounds like you know, you're vaccinating a cow or some. You know, it sounds really horrible. And we're supposed to be back to normal this coming Monday, but they've delayed it for another 4 weeks. You know, what that has done, it's probably going to put a lot of small hospitality, pubs, restaurants, travel companies out of business. It's probably going to help the big corporations that are involved in those sectors, because you know, they've got access to the central bank spigot, easy credit, and they'll buy out all these failed companies. Their market shares will increase. But yeah, they're really pushing it here for, you know, I think the reason they've extended it, you know, the controls or the regulations on this beer disease, cerveza, is because they want to force more and more people to take the you know, that thing. Because I think a lot of people are not taking it, even though we're told that, you know, millions and millions of people have taken it. I think that's a bit of a propaganda to make those people who haven't taken it feel like they're like a really small part of the population, maybe, you know, to convince them to do it. So here on the home front here in Michigan, just yesterday, Whitmer announced that this upcoming Monday, all restrictions are removed. You know, we're free to go, and they're painting that narrative that everything is fine. And even in New York, they had fireworks. I think it was earlier this week, where they just saying that they threw out a percentage saying that 70% have participated. Here in Michigan, 60% have participated, but yet they're still continuing to reach out to people. Even in Michigan here, they said that for those that are a little bit older and not able to, you know, come to us, we're going to go to them and being a good Samaritan. We're going to knock on doors and make sure everybody's, you know, good to go. And I'm thinking like, I'm like, if everything is so good, you know, why the need to continue to push the narrative that, you know, we're not done yet. The fight still goes on. And then also July 4th is supposed to be Biden's, you know, time frame for 70% for the country. And of course, once again, can you believe those numbers and stats being given? My first thought is no, you cannot, because they're hiding all the adverse reactions and all the the things that they don't want people to know, but they're promoting all the things that looks good. All the commercials is like, you know, why did you decide to do it? And the first thing people say on the little infomercials is, I wanted to get back to normal. And I'm like,
yeah, okay, but yeah, okay. So we'll see what
I
that
wanted
goes.
to go back. I wanted to watch the Tigers game.
Yeah, like Tigers they suck anyway. So, oh my goodness, man. Having fun, man.
I have a cousin who works for the Tigers, so she might not want to listen here.
So I didn't mean to say that, but yeah, I've gone to.
No, it's all right.
I'm not a baseball fan, so Tigers is not too far away, but it's like the Michigan sports in general are all heading that way, so it's not really enjoyable. So
I think it goes in cycles, doesn't it?
Yeah, but it's been a long drought for Michigan. A long drought. Oh man! But anyway, for those tuning in, feel free to throw out some questions and some comments or whatnot. We'll touch on it, and just having fun this Friday, man. But I think every situation is different around the country because Florida seems to be the Florida and Texas in particular seem to be the focal points for freedom now and the great pushback, and so everybody's migrating down south in a sense. Man, I wonder how long will that last. Because it's going to drive up housing prices. It's going to create a lot of problems for the economy down in Florida, good and bad. But what about the states they're vacating, like California and New York? What will they do with those? Well,
they might be pressured into changing the way they act. If they want to attract people back.
Yeah, that would be. I would hope that to be the case, but for some reason, when this whole agenda is you'll own nothing, you'll be happy with it. I'd imagine they want everybody to sell out because you got all those money managers, pension funds, all those pools of capital sitting around coming up waiting to buy stuff. So I'd imagine they're literally trying to take the pinch.
Maybe after they buy everything, then they'll put it back to normal. And then.
Yeah, but it's going to become rent from us. And so one of the articles I shared on Twitter is that there's people now trying to sell the narrative of, maybe renting is better than ownership. And I'm like, at what point did the American dream in particular concept be shifted to where now it's better to rent as a part of the dream as opposed to owning your own home or whatnot for whatever that's worth? So they're changing the narrative in every area of our lives, Mario. It's
the president of the European Commission, she's a German. She announced his certificate yesterday for the beer disease. Her name is Ursula von der Leyen.
Yeah.
And I looked her up on Wikipedia. Her on her dad's side, she's related to slave owners back in the day in South Carolina. And even further back, her family, they were one of the biggest slave traders in England.
Really?
So it shows how, I'm not saying, you have to blame her for everything, but it's in her genes to try to control people.
Yeah.
These are the kind of people that are still in charge. And when you look at her, you think, oh, she's a nice German lady, Ursula von der Leyen, she sounds really friendly. She showed her certificate on her phone. She smiled, and it's like people don't dig deep enough, under the surface to see where do these people come from.
Very true. Very true. And so speaking of which, I just saw a comment here about the agenda in Alberta. It says, hey, we're thinking about they have a lottery for 1 million up here in Alberta for all those who agree to get to participate. And the fact that they are given incentives, like, of course, I saw haircuts for jabs, joints for jabs, free burger. No, literally, like Washington, the state of Washington is like joints. I'm like, huh? Okay. So every state, every city has their own selling point. And I'm thinking, like, if people don't critically think and realize that if they have to sell it to you that bad,
heroin for jabs,
huh?
Heroin for jabs.
Probably in Oregon, I didn't see, but Oregon, I know they legalized all.
You're trying to keep people healthy and give them drugs. It's like,
oh man, it's crazy, man. So, but it is what it is, man. So we were talking off air about how the news is so negative and so full of fear. Even when we come together, for example, we don't try to promote fear. We try to make people be aware. But then also it's that time to unplug, enjoy your weekends. And as I was mentioning off air about the whole talking about prepping and how a lot of that has to do with our mindset. And whether what you see?
Robert 292, lap dances for jabs.
Oh no! In Las Vegas, I saw that. I shared that. Like literally, that's real. I shared that. And
my goodness.
Also, listen to this. This is off topic, but I shared an article where it said there's a shortage of dancers in Vegas, I think, and so they're giving signing bonuses for female dancers to come back to work. And I'm thinking like, wow, like so all these events, man, are strategically planned.
Yeah.
But about focusing on a little bit of good news here and there, like creating your own good news, the mindset. Like if they're structurally trying to plan a reset, how can we be proactive in creating our own? And I want to say even a reset, but a restructuring of our own lives and our priorities is what we need to do. Honestly, you know what I'm saying? A lot of that has to do with the financial realm, the spiritual realm, the natural realm. Anything else come to mind that it would be a good area of our lives to probably put a little time into?
Yeah, actually, I interviewed Bjorn Andreas Bo Hansen. He's got a YouTube channel, like 400,000 subscribers, and he's from Norway. He focuses on his Viking heritage. But he loves the outdoors, and he thinks that spending as much time as you can outdoors in nature is good for your mind.
Yeah,
he realizes that not everyone can live in the woods or in rural areas, but to try to do the most you can to spend time outdoors. I think that's a good thing. We spend a lot of time in front of our computers watching things and everything. I try to play golf. That's quite nice outdoors, but maybe I should try to do more. And I think more people should try to do that as well.
Yeah, I would agree. And that is key outdoors. So like literally every summer we like to take some family trips or whatever, but yet the typical way we do it is not necessarily available to us now. So like literally the first idea was let's get outdoors, let's see nature. Because there's a lot of places here in America where I've never been to just because I never had interest really in touring my own country. But now I'm like, given the fact that, it's not as easy to get up and leave, I might want to venture out into the woods. And we got a lot of beautiful scenery here in Michigan, especially. So, yeah, it's time to, just, I guess, find the hidden gems in my own neck of the woods.
That's right.
Oh, man. But let's get ready to dial back, man. Mario, it's always great to connect with you. What's coming up? Outside, of course, Basel III in about 9 or so days. What's coming up that might be worth keeping an eye on that we can touch on next week and have the viewers really start paying attention to more? So if anything comes to mind on your side.
Yeah, I mean, I made a video today about the elections in Peru.
Yeah.
And why would that be important? Billy didn't get an invite to the G7. Well, yeah. I think he advised the G7 in the back channels. Yeah, but yeah. So yeah, elections in Peru. Apparently, it's almost certain that this unknown guy who supposedly has a Marxist communist background might get into power. We're still waiting for the results. If he wins, he'd only take over on July 28th. But it could affect the silver market because Peru is, I think, the second or third biggest silver producer in the world.
Yeah.
So we need to keep an eye on that. I haven't seen anyone except me talk about that. I spoke about that this morning.
Yeah.
And thanks to one of my viewers. But apart from that, I mean, I think we need to keep an eye on the stock market, and because the Fed might have, not trying to, but they might have just started the next crash in the markets, and also the reverse repo. It looks like all this cash, about $1 trillion. We now have 750 billion in reverse repo, and the reverse repo and repos are the like the plumbing of Wall Street. So what it looks like now is that the plumbing, there's so much money in the system that it's clogging up, and this has never happened before. So yeah, keep an eye on the markets. Things could get really volatile, and they're already getting volatile.
Yeah, and that's one thing I was on the radar to talk about, the whole repo situation, because those numbers are growing every day, it seems like. So that's definitely needing something worthwhile. And with just that, the Basel III and all the other things mentioned there, that's something in that nature there can be used as the breaking point. And then, of course, we didn't touch on even the Australian, going offline yesterday, and how that cyber situation is still underway. And so one of my viewers this morning from Australia said, there's a cyber attack. They couldn't, they went to buy some silver, and
You know,
Payment
their
processing
bank,
system.
yeah, couldn't do anything.
Yeah, the apps are down. So I was talking about last night. Imagine logging on, of course, and it's a glitch or it's buffering, it's not loading up as fast, you know, because all those servers and all that stuff is connected. And I think there's a single point of failure, and it happens to be with those companies that are hosting on behalf of all the banking entities, even in-house or outside. I imagine all those corporations are probably, you know, they're probably partners with the World Economic Forum. So
yeah.
they know what's the timing of everything. So, and then another thing I want to mention on, which, you know, definitely may not get covered much, but I think it's going to be important. And it's what's happening in Israel right now with their new government, Netanyahu's out. And there appears to be a lot of uncertainty as to the direction of their, you know, congressional leadership there outside of the president, who, you know, we'll see, our prime minister or whatever, whoever he is. So it's going to, you know, how will the U.S. respond? Because they've been very favorable to the Israel the last couple of decades. And so I think a lot of biblical things are lining up right now, especially with this move here. So that's something that we will definitely hear more about in the future. So, but Mario, once again, man, it's great connecting with you. For those that are tuning in, if you're new here, definitely Manico64 on YouTube is where this gentleman's at, does great work every single day. Go ahead and show him that coffee mug you got. Manico64. All right, man. So once again, everybody, it's been great hanging out. If you've enjoyed this, hit the thumbs up button, share this video, and definitely stay plugged in and stay attentive and try to be proactive as best you can in accordance to the wisdom that you have on navigating these waters. But other than that, be blessed, be safe. I'll see you guys later. Peace.